We want to turn to a major development now that could impact nearly all computers built in the past decade. Security researchers have discovered serious design flaws in chips from Intel and others that could allow hackers to access sensitive data on the devices. The flaws were initially discovered in the middle of 2017, but they weren't made public until this week. Several outlets, including MarketWatch, are also reporting that CEO of Intel, Brian Krzanich, sold millions of dollars worth of his Intel stock after the company was told about these vulnerabilities, but before they were actually disclosed publicly. The chip maker and other tech firms are now rushing to issue fixes here. Joining us now, the Wall Street Journal's global economics editor, John Hilsenrath, with more on that, as well as the economy. John, good to see you this morning.
Good morning, Maria.
How big of a deal is this? What do you think?
Well, I mean, I think it's potentially the security concerns are potentially a big deal. We just have to learn more information. It's a little surprising because usually when you hear about security breaches, it's on the software side of business. This is in the hardware itself, the chips that run machines. You know, as far as these stock sales go, that's something we also need to learn some more about. From my understanding is the CEO was selling his shares on a pre-programmed basis, something called a 10b5-1 program. So they were already planned in advance, but he set up the plan after he had learned about the vulnerabilities. So, you know, it's potentially a black eye for him.
Well, okay. So when you first said it was a plan, I thought, okay, well, then it's automatic. But obviously, you're just saying that he set up the plan after it was known. So I will watch that, John. Let's turn to the Federal Reserve releasing the minutes from the latest meeting in December yesterday, showing that officials are debating now whether the tax cuts might require them to act even more aggressively in 2018. We just mentioned a minute ago the Atlanta Fed yesterday raising its estimate on the GDP now to 3.25%. And versus an initial 3%. What's your reading on the minutes? What does that mean for the Federal Reserve?
Well, you know, so the Fed is planning on raising interest rates 3 times this year. The next one is likely to be in March, Jay Powell's first meeting. You know, the question for the Fed is whether they need to do more than that. And, you know, we've talked about this a lot in the last few months, Maria. There's a lot of wind at the economy's back right now. You mentioned tax cuts. They're coming through. Consumers are going to see that in their paychecks in February. But there's also financial conditions that are really supporting economic growth. In addition to stocks being a lot higher, the dollar surprisingly weakened last year, and interest rates are very low. So there's a lot happening in financial markets that's underpinning growth, and we could have a pretty good growth year this year. And the question is, how aggressively does the Fed want to lean against that?
Right. That's what I just asked you. I mean,
yeah, all right. So
is it 3 or 5? What does your gut say, John?
So my point is that they're saying 3. The risk is it could be more than that. You know, the wild card that they're looking at is what happens on the inflation front. Inflation has been below their expectations. It's going to be hard for them to raise interest rates too aggressively if inflation doesn't pick up a little bit. And they had 2 dissenters at the last meeting because they said inflation is too low.
See, John, this is Lindsay here. That's what I took away from the minutes is that there were 2 dissenters, but there was a ton of debate between the doves and the hawks. I'm concerned there's more doves on this Fed committee now than there were before. How is Jerome Powell going to deal with that as he enters his first meeting in March?
Well, so, I mean, I think Jay Powell is the big question, right? This is the new Fed chairman. And the question that he really needs to be wrestling with this year is how hot does he want to run the economy? You know, we have an unemployment rate now. We're going to get a new one tomorrow. We have an unemployment rate at 4.1%. It's already running pretty hot. Does he want to let that unemployment rate get even lower to try to bring more discouraged workers back into the workforce at the risk of letting the financial conditions or inflation overheat?
No,
we don't know the answer.
And John, something that you don't hear them talk about in the minutes, but certainly will be front and center that could make for a more dovish Federal Reserve, is just all the geopolitical risks that have popped up just in the first few days of 2018. Whether you're watching what's going on in Iran, North Korea, you name it, that certainly has to be on their radar moving into the year.
You know, Dagan, they have looked very carefully at geopolitical risks in the past. You know, during the Greek financial crisis, that was very much on their minds. When we had storms in Japan a few years ago, that was very much on their minds. You know, I think right now the domestic economy is really important. Well, the global economy is important because there's a synchronized upturn,
right,
and that's supporting domestic growth. And the risk is that they let things overheat,
yeah,
and the risk is they do more than 3 interest rate increases
all right,
this
we'll
year.
see. I mean, we'll see if that sort of smashes the recovery just as it's really gaining some traction. John, good to see you, sir.